Hey Shane, how's it going?
Kyle, I'm well. Hope you're doing well too. I still got some technical issues over here with no light, so y'all can't see my pretty face as well as you might like. So sorry about that. I got a new light on the way though from Amazon. I got one for free because the last one only lasted about 10 months. And hey, at least they're sending me a new one.
Yeah, well, it was good while it lasted, so
Yeah.
but we're doing something a little different today. So we're going to do some charts and then, Schwab has been in some headlines and people are just wondering, is there risk there? And the common question too is really what do they do? So
Yeah.
maybe
I think we have a keen interest in how Schwab's doing for a couple of reasons. And I think just to make a couple things clear, we're not given any advice on whether or not to buy Schwab or sell short or anything like that. Um, so we're just gonna kind of educate on how we look at it and where we begin digging when we want to know something about a company and how it works and what it's worth and whether or not it might be in trouble. We looked at a couple of balance sheets last week for U.S. Bank and Silvergate Bank. I think that was last
or
week.
Silicon Valley Bank,
Or
but
Silicon Valley Bank, sorry. And yeah, Silvergate was another one that failed. But they intentionally or I guess voluntarily decided to wind down operations rather than being taken over by the FDIC. So Silicon Valley, we're going to look at their chart. We've still got their balance sheet in. But we at Elevate, we open client accounts at Schwab. So we have about $120 million over there, and that's our client money, and we feel pretty confident that that's an okay place to have that kind of money. Um, we'll get into why. But again, we're just this is for education purposes, not for stock recommendation purposes. Um, and so I just want to make that clear. And we probably won't reach a final conclusion because it takes a lot longer than an hour to really understand a company that's as big and has as many tentacles as Schwab does. So I only read through, I think, the first 30 pages of their 10K, which is a 160 or 170 page document so far. So I plan to read all the rest of them, and then they'll have earnings again coming up. What soon? Did you look? Do you know when their next earnings date is?
that's the one thing I didn't look at.
I'll tell you in a second. It's in 17 days. It is on Monday, April the 17th. So that is coming up soon, so we'll get an update. And what we'll want to do is, like myself personally, is I'll want to read the most recent 10K, maybe go back and listen to the company's conference call as well, and then compare it to the next one and see how things have changed given what's gone on in the market since their last time they reported, which was in January 18th, and they were reporting as of, the prior month end, December of 2022.
Hmm.
So there's definitely going to be more to come on this, but we thought just given some of the questions we've gotten from clients and our own personal interest in this kind of stuff because we're nerds with letters after our names and all that. I just think it's super interesting to dig into and show people that this stuff's mostly publicly available. So if you want to know this about any company, here's how you kind of start that process and go about it. So Kyle, anything to add?
I think you nailed it. And one thing I'll tell people too is as the general public, if you want, you can get in on those earnings calls. You're not going to be able to ask questions. So you can't, ask the CFO what's going on, but you can listen to the analysts ask questions. You can listen to the management kind of walk you through prepared remarks as well as the Q&A. So it's definitely something worth listening to if you're really interested in a company and just want to learn more.
Yep. Yep. Well, so we'll jump into a few things. I think we're going to tackle some of our standard charts first, but keep those kind of limited. So let's see what we got there.
Yep. So we'll start there.
We got the wrong date because we bumped everything from yesterday, Thursday the 30th, to today, Friday, March 31st. So wrong date
Yep.
on the cover page, but no big deal.
And then, just starting off here. So we brought this up last time, but just showing you can have some pretty big rallies in a bear market before things go down. So, the
Yeah, I'm gonna
recent
keep this.
action.
I'm gonna keep this as the first slide for a while, just to remind people that because the market thinks that we solved the problem, with the banks failing. Again, two of the three largest bank failures in history, in the past couple of weeks. Um, Market rallied after Bear Stearns was bailed out and bought by JP Morgan. Held up for 6 months before Lehman finally filed bankruptcy and the market really dropped out. So no guarantee that this will happen in the future either, but certainly can. And there is historical precedent for a rally from here, only to fall to some fresh lows later in the year. So we'll see how this plays out, but I think this is something to keep top of mind.
Yep. And then with that, we're looking at today's chart. So this is the SPY, and it looks like we broke out. I mean, I'm looking at the market right now, and it is really hard to have a bearish lens because it's breaking out, it's consolidated through here. It does make me think, hey, is this, a point where it wants to race higher? It's not a great buying opportunity because you always want to get in on pullbacks, things like that. At least that's how I view it. But this does, if you're a bear right now, it's a tough world to live in, at least for the last few days. But big
Yeah,
picture, we haven't hit any new all-time highs or anything yet.
no, I mean this definitely looks bullish, and I think it's still, while it looks bullish, I think it still qualifies as mostly a sideways market for the past several weeks. Going back to even really like late February. We're really not that, we're where we were. Let's see if I can get out my little pencil deal here. But I mean, we're right back to where we were here and right back to where we were here. So I mean, it's mostly sideways despite some up and down volatility, but mostly going sideways.
Mhm.
And I don't see a big breakout here. I see we're above the 200 day, we're back above the 50 day. We've put in a series of higher lows, although this higher low down here wasn't nearly, on the same trajectory as from here to here. And we haven't made a new higher high yet. So we'll see. But yeah, I agree with you, man. It's kind of hard to be like, oh, the market's bearish. I mean, based on the technicals look bullish to me. It looks like the market wants to go higher. I just think the fundamentals don't really align with that fact. And I think the markets are totally. I think Mr. Market is totally delusional here, and all this buying into the end of the month doesn't surprise me all that much. It's just kind of things that happen at the end of the month, end of the quarter. Today is the end of the quarter, so you get some rebalance buying. You get some window dressing. You get all types of these things that happen at the end of the month and end of the quarter, and then tomorrow, I guess Monday, in this case, Monday will be the beginning of April, and it might all just be totally undone. So you just never know. But I totally agree with you that this looks pretty bullish.
It does. And my personal approach on this is when I see this and it's just not looking, it looks a little more bullish general market, but it's still kind of choppy. I want to go go find those segments that have momentum and trend and then find the leaders in those. And maybe I'll do those stocks because you can always have a strong stock in any market. And that's kind of where I'd want to be looking. This is tough when it's this choppy still.
You don't just want to go buy regional banks, Kyle?
Um, if I have a crystal ball and I can tell what's going to happen there, you bet. But right
Yeah,
now
I
it's
th I think well we get bank earnings starting April 14th. So I think all the big banks will report first and then all the small regional banks will report the following week. And I think there's going to be a tale of two cities there. I think the big banks took a whole lot of deposits from the small banks by doing basically nothing. So all the big banks will probably report, oh, things are great. We grew our deposit base by this much and didn't really have to do anything for it. And then we'll find out that all that money that the big banks, JP Morgan and so on, all the money they got came from the small banks. And so all those smaller regional banks are probably in deeper doo-doo than they were before. And so I don't think that's necessarily a good thing for the overall economy to have even more consolidation into the big five banks or whatever, it really is. But I do think Charles Schwab is probably a beneficiary of some of that money coming out of the regional banks because I've seen it happen with our client base. So
yeah,
anyway, earnings season coming up. We'll have another call before then, though.
yep. So, and then turning to the Qs looks even better.
Even better.
Just
Yep.
kind of breaking out, had a bit of a consolidation right here going higher. This is a nice spot where, I think the entry really was yesterday on this was a really nice one to go with. But man, if it holds that, it as surprising as it is, looks to be confirming a new trend higher. But we'll see how it plays out. And always good to look at more of like weekly close on that, I think, not just the day.
Yeah, that looks pretty bullish, man. I tried to short it yesterday at the top end of the range, which is not my normal trading style, but I stopped out very quickly, and thankfully I'm not getting my face ripped off here as this thing climbs higher into month end. I should have known better that we were gonna rally into month end. I just it seems like very predictable to me, so I probably shouldn't have been messing with that. But I don't really have any positions on right now. I'm just kind of sitting back and watching. Been really busy out
Yeah.
of the office a little bit this week dealing with some family stuff. So I'm a little bit out of the markets this week.
And then this one, so SBV Financial. Shane, I asked you to put this up, and part of the reason was, you know, big picture, and we'll get into this later, but when it comes to liquidity for a bank, is that as with any publicly traded company, they can always sell shares to get liquidity, but also it paints a picture of maybe something's going on that isn't so great, or, it could be a positive too, but in this case, downtrending for about a year, that doesn't look very good. And you wonder, well, what's the reason? There's the macro economy, but there's always that, question, maybe it could be something else too. And in this case, we saw what that something else was. Now that bank has gone into, I think the term is conservatorship with the FDIC. So yeah, not a good chart when you see that. Trying to pick a bottom, that really hurts some people.
Dude, $763 a share November 21, and today 91 cents. And they added the little Q to the ticker. You see that Q?
Yeah.
That's what happens when you go bankrupt and you go from trading on the Nasdaq or the NYSE to trading over the counter markets. They add a little Q to indicate that you are worthless and basically gone to zero. It starts with a zero, right? 0.91 is close enough to zero from 763.
Yeah.
So I mean that that's down 99 point something percent. It's awful. And so while the depositors of the bank may have not lost all their money, the stockholders, the equity, the people who owned the bank, they lost all their money. This
Hmm.
thing effectively went to zero. Um, and I didn't look at SBNY. Did it do the same thing?
Like you, I haven't
Um,
looked at that one yet.
SBNY. Yeah, it's not trading. Is it? Maybe if I add a Q to it, SBNYQ. Nope, not yet. So that one's not even trading on the pink sheets yet. Oh wait, SBNYL. There we go. SBNYL. It has gone to, it's now at 0.05. So you can buy it for 5 cents a share. Used to be, 28 bucks. So same idea. They added an L. I wonder why they added an L instead of a Q. Anyway, SBNYL is the symbol, and it looks, pretty similar. And
Yeah.
you don't want to be in a company when it adds a letter to its symbol. You might want to be short it, but you definitely don't want to be long. So
Yep.
anyway, that's pretty brutal. Should have seen that coming. Wish I had been short it back in November.
And then for reference here, we brought Schwab up, and same idea. One, it is a source of liquidity. If they need funds, they can always sell more shares. That does dilute the stock, puts that price lower. But, big thing here, Schwab, no real trend, but it was doing pretty good. And then this is when that news hit. That's hit the entire banking sector. And then that's when you got to ask, are they throwing the baby out with the bathwater? So we'll look at a few things, just how to go about this. Again, we're not going to tell you if you should be buying Schwab or not, but we will look at it through our lens and how we might approach it.
I'll tell you what. You know what got my attention on Schwab was that this day. So that's one candle. This is another candle. And this is another candle. Those 3 days were all three in a row. And I look back through the history of Charles Schwab stock going back to 1987. Those were those were three of the worst 15 days in the stock's history, including 2008, 2009, back to 2000. In the 90s, there were some bad days. But get this. This is 3 of the 15 worst days in the stock's history. Thousands of days of trading history. And they happened back to back to back. And I was like, that's crazy. Like that's overdone. I don't like I just as a technical trader, forget the fundamentals, don't even care. That's an oversold deal and it's gonna bounce. And of course, look what happened as it bounced all the way from 44 up to 60 the following day. Um, you know, say $15 on 44 is a 34% gain overnight, just on a bounce. So
Yeah.
when stuff like that happens, it should get your attention from a technical trading perspective, regardless of what the fundamentals say. It doesn't always have to happen. I mean, some things like Silicon Valley just keep going down until they go to zero, or they halt trading with you stuck in them, and then they reappear on the pink sheets a couple weeks later for fractions of a penny or something. So you got to be careful with that kind of thing. It's not something you want to put the rent money on, but it should get your attention when a company the size of Schwab, right? It's a huge company. What do we say, $7 trillion in assets or something?
Yeah, and customer assets.
Crazy number. When something drops that much, something like Schwab drops that much that fast, it's probably gonna bounce.
Hmm.
So that's what got my attention on it initially, and yeah. So I don't know. I guess maybe from there, what do we got next on? Oh, we got some more charts to get through, so we're gonna have to come back to Schwab.
Yep.
Come back.
So here, still looking inverted yield curve. It's gotten a little better, but still inverted. And yeah, banks are the direct, not benefactor, but a recipient of that bad news. That
Yeah.
does not help them.
Well, it got better, but then it dropped again, right?
Yeah.
So we got a big bounce when all this bank bailout stuff was happening in the spread here, and then it re-accelerated to the downside pretty fast. And this is the 10-year minus 2 year. Now it's funny, we've been talking about this for I don't know a year or so, well, at least since back here, at least since the beginning of this year, um, on this call and saying like, why would you want to own banks with an inverted yield curve like this or a negative tens minus 2 spread? Because banks, they take money at checking accounts and they lend it out longer term. And right now they're not able to make any money doing that. So is anybody surprised, knowing that, how can you be surprised that banks started to fail pretty shortly after?
Hmm.
Um, I'm not terribly surprised. I'm a little surprised by how quickly it all came out, but I'll tell you what, this doesn't lead me to believe that it's over. There are a bunch of smaller banks that are probably in just as much trouble, if not more, than the ones that already failed. It's just that the ones that failed were pretty big. So,
Yep.
so we'll see what happens in the smaller regional banks, especially when they report earnings next month. See how they're holding up, but I bet it's not great.
Ooh. And then was this another view, the 3 month versus 10-year?
Yeah, so this is 10-year minus 3 months. So you can get more interest loaning the government money, not only for 2 years than 10 years, but you can get more loaning them for 3 months than 10 years. So another way to look at this is the twos minus 3 months is inverted, right? Like inverted across the curve. And here's the thing is the 10-year minus 3 month is the most negative it has ever been in history going back to the 1980s. So we're at minus 1.42. It crashed to a brand new cycle low yesterday, and it doesn't look to be getting any better. So, like, again, if you're in the business of banks, you're borrowing money at the 3 month rate effectively and lending it at the 10-year rate, and you're losing money. You're losing money on your principal operating business. Again, how can anybody be surprised that banks are failing? So again, the only surprise to me is that people are surprised by any of this.
Hmm.
I think I think it's going to get worse before it gets better. And I don't necessarily think that the government bailing everybody out and adding assets to the balance sheet is the best thing to do in this case, because I think inflation's probably going to reaccelerate from here, given what they've done, and they'll have to keep hiking rates. It's just in a bad spot.
Yep. And with that showing the balance sheet, so it leveled off a little bit, but you'll probably see some sideways action. I mean, that was a huge move up.
Yeah.
Um,
I think it's crazy though that the banks borrow an additional 88 billion at the discount window plus 64 billion through the new, bank bailout program. And somehow the balance sheet declined by 28 billion. So I don't know what the Fed did. They've said that they're not going to outright sell securities. They're just going to let things roll off. But there hasn't like there's not 116 billion per week in roll-offs. If that were the case, we'd see 400 billion per month rolling off the balance sheet, and we haven't seen that ever since they started quantitative tightening. Um, so I don't know what happened. I'm interested to kind of find out, but I think it's a little too early. I don't know where to even go to get that information, or if the Fed will tell us before their next meeting. But I'd love to know how we got a downtick with, effectively this 64 billion and this 88 billion plus a third facility that I didn't even include. All that money got added to the balance sheet last week, yet somehow the total balance sheet assets ticked down.
Hmm.
So there had to have been some other operation going on that I don't fully understand, and I'm interested to see what happened. Like if they changed their mind and they actually did actively sell securities into the market. Um, if so, I didn't notice it in the market anywhere, and we're actively participating in those markets. So I have a big question mark about how all that happened last week.
Yep.
So we'll see, but I find it fascinating.
Yeah. So then, Shane, should we go ahead and turn it over to the 10K and how to dig into these?
Yeah, I can't remember if we had any other charts. I think we're probably good on charts for now. So yeah, let's get out of the PowerPoint. And for people at home who want to know, you can do this with pretty much any company. You just go to Google and look
Yep.
for the company and their investor relations page. So every publicly traded company, for the most part, except for maybe really, really small ones that don't want you to know anything, they have an investor relations webpage where you can find all of their, earnings transcripts and press releases and other cool, presentations for investors, just information that you might want to know before investing in a company.
Yep.
Um,
So, in the case of Schwab, you can just go Schwab Investor Relations in Google and kind of the first thing that comes up. And what's nice is investor relations, they're kind of, I wouldn't necessarily say independent of the company, but they are there solely to help shareholders understand the company, how to invest. So when you go into their website here for the investor relations part, you can find all kinds of helpful information. So not just the filings, but you look through here. So you got bank deposit account summary, fourth quarter balances, corporate events that are coming up. So nice place to be looking if you want to learn. And the presentations too, those can be really helpful. So you can go in there and learn just more about what Schwab does and some of the guidance they're providing.
yeah, the presentations are great. I get a lot of good data out of those. And then also, like, usually those are the same presentations that they use during their earnings call. So, like up here where you were, if you scroll up just a little bit, it shows you the upcoming earnings call date.
Yep.
Um, so, right here, week of April 17th. Oh, they don't even have the actual date on there, normally around the 11th business day. So, it will be April 17th. I'm surprised they don't have a link right there to it. I don't know if you want to click on that, but if you clicked on it, you might get the link to actually sign up. So you can always find on their website, or if you just Google, or search whatever way you want to search, you can find the link to log into and listen in, like Kyle was saying, to
Yep.
their earnings call, and you'll hear usually the CEO or the CFO and some of the other executives discuss how the business is doing. And at the end, you'll usually hear some questions from analysts who are updating their models. Models are just, projections of how revenue will come and how expenses will hit and what will be left over in the form of earnings. And so, based on those projections, is how we determine what a company's present value is. Because every company should be worth the present value of its future cash flows. That's what everything is worth.
Yep.
And the whole market exists to be a place where people can express their opinions about what something is worth. And usually, um, for the most part, things will converge on a value between buyers and sellers, and we'll get an idea of what something is worth. But the market is far from efficient, so you can always find pricing inefficiencies to exploit.
Yep.
If we couldn't,
So
then we wouldn't trade.
so then when you click annual report, you come in here and you go to Form 10K. Now, 10K, it only comes out once a year. What's nice about it is that it's the most comprehensive of the filings, and it gives you a good idea if you're trying to understand. The question I had was really, well, what does Schwab do? How do they make money? So this is a great place to come in and just starting off here. So the
Yeah,
table,
hang tight on the table of contents for a
yeah.
second. One thing I wanted to, I was just thinking as I was reading it is so risk factors, right? Risk
hmm
factors start on page 12, and the next section doesn't start until page 21. So there are literally 9 pages of risk factors to look at, things that might cause the stock to go down or go to zero. You never know. And
Or in
I was thinking of myself last night as I was reading this. I was like, if people ever read this, nobody would ever buy any stock because it's like the risks are very real. And if something happened to your company where it lost a material amount of value and it wasn't listed as a risk factor, you know what happens? You get sued. And so it's like pouring salt in the wound of something that's already bad. And like now you're getting sued by shareholders because you didn't tell them that it was possible that this type of thing could happen. So it's a good place to spend some time on just looking at I'm going to buy this company. And every time you buy one share of a company, you should consider like, what if I was buying this whole company? Because the share is just one piece of the whole thing, right? It's valued like the rest of the thing.
Yep.
And so before you go and buy something, you might want to know what is going on with it and certainly want to spend some extra time focusing on the risk factors.
Yep. And those risk factors, Shane, you mentioned the share price, but you also have just operationally. So you're going to have
Yep.
everything in there. So, interest rate risk, liquidity risk, what if fraud happens, all kinds of stuff, or a key employee just vanishes, you know, all that gets covered there. The other thing down here, so then if I want to look in there, legal proceedings can be a big factor for companies. I mean, if there's a lot of the drug companies, those are ones where, they'll have $1 billion reserved for a lawsuit. And oftentimes, if they settle for less than that, the stock price can react positively. On the other side, if they lose and, lose as much or more than that, that can be a negative. So,
Yeah. Also, companies like Tesla have a lot of legal proceedings. And the
mhm,
interesting risk factor is like, what if our CEO sells a whole bunch of shares and pushes the price down by 50%?
yeah,
So there's always something interesting. Like there's like some boilerplate risk factors that pretty much everybody has, right? You'll see the same stuff repeated and copied and pasted from one company to another and one industry to another. But then there's usually some interesting or extraordinary risk factors for each individual company that you're like, huh, never thought about that being an issue. I wonder why they're telling me that could be an issue. Like maybe it's a bigger issue than most people consider. So yeah, but like look at it. Oh, I guess we only get to page. Is there another table of contents page? Is it only 136 pages?
yeah, 136 on this one.
Well, shoot, I'm
Um,
I'm a lot further along than I thought. Cool. I'll get
um,
finished in no time.
yep. And then the other one I look at here, so management discussion and analysis of financial conditions.
Yep.
That's a good one. If you want to go in and understand kind of big picture what's going on in these areas, that's a good one. We'll kind of get into that today. But
And you
those are,
also look for changes in that section from one quarter or one period to the next. Like
yep.
when the language, because a lot of this language, like if you go look at the last year's 10K, like a high percentage of the words contained in this document will be exactly the same. So the ones
hmm
that are different, you want to pay attention to because that's a new thing that came up over, the intervening period, either, from the last quarter or from the last year, depending on which ones you're looking at and reading. So,
Yep.
and then obviously the financial statements is the main focus, right? Page 63. Is where we're going to look at the data. But I'll tell you what, if the CFA Institute burned one thing into my head, you do not read the financial statement numbers without reading the notes to the financial statements
Yep.
because you don't even know what the numbers are. Like, I mean, Kyle, you're an accountant, so you can build these things. I couldn't build, a financial statement. I just know how to analyze one. The CFA Institute taught me how to analyze one and where to call BS on somebody's number or somebody's assumption or their depreciation schedule because every company has a choice. in, how they want to account for something. And those accounting decisions can be either very aggressive or very conservative. They can accurately represent the business, or they can very inaccurately represent the business. And if all you do is look at the numbers and you don't dig into, well, how did they choose this number? How did this number, come to be on the financial statement? If you don't understand that, you can find yourself in a real world of pain later when you're like, wow, that didn't work out the way I thought it would. And so don't bother reading the financial statement numbers. Don't look at the revenue, don't look at the operating income, don't look at the depreciation number. Don't look at any of it if you're not willing to read the notes to the financial statements, because you may very easily get the total wrong idea of what's going on.
Yep, that's a good point. So, but going past the table of contents, the first thing you're gonna run into here is just the general business overview. So, Shane mentioned it, but here's something pretty dang important is, Schwab had 7 trillion in client assets. And before you can go anywhere, just think about that for a second. It's not great to look at a government backstop, but 7 trillion. I mean, if Schwab were to just do everything wrong and go the wrong way, I can't imagine the government not stepping in and being like, this is a big problem. We got to do something to shore this up.
Hey Kyle, can you do me a favor, and I think all of our viewers a favor, and just zoom this in a bit bigger so that we can
Yep.
actually see that? I can read it, but I don't know how it's going to translate to the video. So maybe, go to 200 or something.
There, yep,
Yeah,
there we go.
that's probably good. All right, so yeah, 7.05 trillion in client assets, and I'll tell you what I thought was super interesting about that is if you go down to the final paragraph of this page,
hmm Let me get down
um,
my little scroll bar there.
you don't have a wheel on your mouse. You don't have a scroll wheel.
I was having technical difficulties with my headset, so I had to unplug the mouse. But uh,
Gotcha. All right, so scroll down to the bottom. Um, yeah, the final paragraph. There you go. So check this out. Where is it? Management estimates that the investable wealth in the United States of America is 60 trillion.
so that's what we're at about 12% of all investable wealth is done through Charles Schwab.
That's crazy. That's a crazy number. Like I couldn't even, like, when I read that last night, I was like, holy crap. Like why wouldn't the government stop them from getting bigger? Like why would the government allow them to buy TD Ameritrade's entire business, like which is what they did in 2020?
Yeah.
Like I mean, TD Ameritrade was only half the size as Schwab, but geez, like that probably added $2 trillion to that number. And it's just like too big to fail, man. It just keeps popping up in your head as like too big to fail, too big to fail, too big to fail. And it's like, I don't know that that's good for an economy.
No. But yeah, that's a number you can't just gloss over. And then here's some of that, business and asset acquisition. So you have TD Ameritrade that's in there. This kind of you can read through this and just get a general overview of that. Um,
Hold on, scroll right back up just one quick second.
Shane, are you looking at this IDA agreement?
Yeah.
Yep. So maybe you can talk to that. I know that's an agreement that allows Schwab to make a little bit of money on, was it deposits through TD Ameritrade?
Well,
Is
yeah,
that right?
I was gonna have you scroll up a little bit more, but don't worry about it. There's some interesting language in here about TD, because there's a thing called TD Bank. Uh, and TD Bank, I think, is like a Canadian bank. Like I think TD stood for Toronto Dominion, unless I'm getting things crossed. And I haven't, like I said at the beginning, I haven't dug into this enough to really develop the full narrative of all the different tentacles of Schwab. But, that's another bank, whereas Schwab is more of a broker dealer, right? Or financial advisor or custodian. Like the banking aspect of their business is extremely small. And like even below that, USAA is a bank, but Schwab only bought the investment management business, right? They only bought the USAA's investment management business. They didn't buy the banking business. So again, Schwab is down a whole bunch because it's in the financial sector, and these small regional banks are having big issues. But Schwab is not a small regional bank, and even though their bank is relatively small, Schwab is big enough with its $7 trillion of client assets that it doesn't need the government to bail it out. It'll just use its investment management business to bail it out if it needed, backstopped or couldn't meet client deposits.
Hmm.
I don't think they would immediately go running to the government for help because there's so much other, stuff
Yep.
that they could do in order to prevent that from happening. Because,
Yeah.
the business's reputation is forever tarnished the moment that they ask the government for help.
Yeah, and
So,
you can find that. So that's in the liquidity section I mentioned, and that talks about the tiers of liquidity they're able to access before ultimately filing for bankruptcy or
and I think
trying to
there are
find other
regulations that
sources.
say that they have to, like they have to use their own capital first
Mm,
to backstop their banking operation. Like I don't think it's even a choice that they make. Like I think they actually have to do that.
yep. So, and then, some fun stuff here. This tells you about the different business segments. So there's advisor services, and then there's just kind of individual investor services. So, we would be a client as an RIA of the advisor services division.
Yep.
And then this is a big one. So sources and net revenues. This is the big one. And I've had people ask this question as they go, well, how does Schwab make money? Um, so if you come down here, sources of net revenue, and it tells you that they get it through asset management and administrative fees, trading revenues. Oh, and I skipped over. So the biggest one is net interest revenue. So this, it tells you here. So the primary funding source of interest earning assets is uninvested client cash balances that's held on their balance sheet. So think of it when you have funds that are in an account, not all of it's invested. Some sits in cash and they can use that and earn some interest on it.
And there's a lot of that kind of money just
Yeah.
sitting in cash and cash. Like Schwab pays very close to zero on their cash, like very, very close to zero. So if you're a client and you just have money sitting in cash waiting to be invested in stocks or something like that, Schwab's paying you zero, but they're taking that cash and they're investing it in US Treasuries usually. I think mostly short-term stuff. And from there, they're keeping all the interest and they're sharing none with you. Versus a company like we used to have a lot of our clients' money at Interactive Brokers, and Interactive Brokers would pay 2-3% on cash just sitting idle in your brokerage account, which
Hmm.
is a lot better than zero, right? But still, Interactive Brokers is earning a net interest margin as well. They're paying you, say, 2% or 3%, but they're earning 4% or 5% by buying these short-term treasuries. And so they're keeping the difference. And that's one of the ways that these companies make money. It's primarily the way that Schwab makes money. I mean, when we get to their balance sheet, you'll see that their net interest revenue is, I think, 5 to 6 times their next biggest line item for revenue. So
Yep.
that's how they make a lot of money. But they're also not lending it out like super long term. My understanding, and I haven't been able to totally verify this yet, but if I were Schwab, and obviously they know, like, they're a financial company, they know how to do financial stuff. If I were them, there's no reason to go out more than 3 to 6 months on the treasury curve because you're getting 4.7% for a 3 month treasury and you're paying your client zero. So you're keeping all that money. There's no reason to go out to 10 years. I mean, if you bought a 10-year bond, you're going to earn less than you bought in the 3 month treasury anyway, or than you would earn in the 3 month treasury anyway. So why add the additional liquidity risk of tying up someone's money for 10 years when you could get a higher rate of return tying it up for only 3 months at a time and take a lot less risk in the process? So I don't see Schwab as taking, a super long-term view with those cash deposits. There's just no need to do that right now. So it's another
And
reason that I'm not super concerned about, like, oh, same thing's going to happen. If all the people, if all the 300, what is it? It was like 38 million accounts that they have, brokerage accounts, it says somewhere in here, I think. If every single one of those people asked for their cash back, just the idle cash in their accounts that was waiting to buy stocks, um, they would probably be able to return it pretty quickly because
it
it's just in short-term treasuries.
and we can talk about that. And something else they do, and I want to just address one thing, Shane. So you mentioned, paying people zero. Well, that's part of the problem now is that with short-term treasuries returning what they are, is that people are kind of saying, hey, I can get more. So these brokerages now, instead of paying zero, and that's what it was, they have to pay just a little bit more, and that just hurts their revenue a little, makes it more expensive for them to borrow money.
But
But
on one hand, though, they're also trying to drive people into their money market product where they charge a fee,
mhm,
right? So they can't charge a fee on cash. That's why they're doing what they're doing is they're saying, hey, I can't charge a fee for this cash in the account. So I'm going to take your cash. I'm going to earn some interest from the government in the form of these short-term treasuries, and I'm not going to share very much of it with you. And
yep.
so what that's doing is saying, well, geez, don't you have a money market fund? And Schwab says, well, yes, thank you for asking. We do have a money market fund. And once you put your money into the money market fund instead of the cash position in the brokerage account, they're going to charge you a fee on that money market fund.
Yep.
I don't know what did you look at any of those? They mentioned them in this 10K, but I didn't look at any of the ticker symbols to see what they actually cost.
Yeah, so I don't know the costs on that, but what I will tell you is that typically that's what banks will do, especially a brokerage firm like this. They're not, Schwab isn't so concerned with deposit runoff because Schwab offers those investment options.
Yeah,
It's just,
that's where it'll run off to. It'll
yeah,
run off to the money market fund.
so the issue then becomes the cost of funding. So they would love it if you would just keep all your money in the checking account and pay you zero while they make money on, lending it out, or they'll also buy long-term securities rather than lend it out. The reason being is the liquidity. So if they lend out a mortgage, they can't get liquidity on that right away. But if they just buy agency debt, which is, mortgages that have already been packaged up nicely, they could sell those in a liquidity event. So,
All right, so here you go. SWVXX is their normal their money market fund for normal people, like with normal amounts of money, right? And it costs 34 basis points. So 0.34% is what it costs to own that fund. And they pay you 4.68% is the current yield over the last 7 days. Um, so here's the thing is with that, they're making money in two ways. Number one, they're charging you 34 basis points. But check this out. They're also still keeping some of the interest for themselves because there's this other fund they have called SNAXX, and this is for people who put at least $1 million into the money market fund, and it pays 4.83% instead of 4.68%. So the difference is 15 basis points basically, right? That Schwab can earn. So they can earn at least, 4.83. Otherwise, they wouldn't be paying the $1 million people 4.83. So in the SWVXX, they're charging you 34 basis points plus they're keeping 15 basis points of the return for themselves. So they're making a total of 0.5% a year on that cash.
yep.
Just for you putting it in the money market fund. And they're making slightly less on the wealthier people because the net expense ratio on SNAXX is only 19 basis points and they're paying 15 basis points more in yield. So they're still making money, right? And that's where the deposits are going to flee to if people are like, hey, I'm not getting paid on this cash. Schwab, do you have a money market? And Schwab's like, we sure do. Here's how you do it.
Yep. So, and then, Shane, just want to get back to the 10K here, but so, risk factors again. So this one, this is the big one. If people are wondering, these questions like, well, what if this happens? Here's your answer. So if you go to risk factors, that's really going to give you a good idea of a lot of the stuff, especially with Schwab, is interest rate risk and liquidity risk. So, they
Yep.
kind of talk about all the, here it is, significant interest rate changes could affect our profitability. And it'll tell you what's going on there. And that's speaking to what Shane and I were just discussing there. Compliance risk. There's always that risk somebody cooks the book or books, and that's in there. So
Yeah, or more banking regulation for them to comply with, which costs money, and they have to hire more compliance people in order to maintain, regulatory requirements and so on. So yeah, what did we say? 9 pages of risks or something like that. And as I was reading
yep.
through all these, I was like, look, if anybody ever read this on any stock, they probably would never own a stock again because there's so many risks to owning stocks. People think like, oh, market always goes up, buy the dip, it'll be fine, everything will go up again. And it's like, Yeah, we'll tell that to people who had all their money in in Silicon Valley Bank, right? If you owned if you owned a big chunk of that stock, it ain't coming back. It's
Yeah.
gone. See ya.
Yep. So then, and here we are flipping through the management discussion analysis. Looking statements, just some legal stuff saying, hey, we don't know what's going on in the future, but we'll make a really good educated guess at it.
Yeah, and they got some definitions. I actually, when I was reading through, I had to come back and make sure I understood how they were defining certain things.
Hmm.
And so, it's not, I wouldn't necessarily read through the glossary, but as you come to a term that's like, huh, what does that mean?
Yep.
You can often find it here, and then it makes the rest of it make a bit more sense. So,
Yep. That is a very good point. So I'm glad you brought that up. And then here is a big one for people who are wondering. So 2022 compared to 2021, and
and what page are we on here? Because we can't see the bottom of the page right now. Does it
yeah,
tell you? Oh,
it's page
33.
33. So if you're
There we go.
searching
Yeah.
PDF or you go on their website, but it's a great point to go in and just see some of the big changes that happen and why.
And this commentary though is referencing the chart that's on the prior page, right? If you scroll back up, I think it gives you the past few years. So first, go ahead one more page higher. Yes, it's actually page 30, even though the PDF calls it a different page.
Mhm.
So, but yeah, up here you see again the numbers, right? And you see that the 1 year growth rate from 2021 to 2022 will be here, and they're all negative numbers because again in 2022 the market was down and people were pulling money from everything. So new client assets in billions, right? In billions.
Mhm.
They took in $406.9 billion of new client money last year, despite the fact that the market was down as much as it was. And the reason that shows a minus 21, it doesn't mean they lost 21% of their deposits. It means that in 2021 they took in 516 billion, and in 2022 they only took in 406.9 billion. So they still took in a lot of. I mean, 406.9 billion is a lot of new money,
Yep.
in
A
new
lot of
client assets.
a lot of new money, but then you got to remember is when clients move their money after a down year, they just have less to move. So
Yep.
that
But
kind
their
of
business still grew. It just didn't grow quite as fast, you
yep.
know. And so by that measure, and the point is, again, what I'm saying is, okay, remember, I just looked at those numbers. Those numbers mean nothing if I'm not willing to go down here and read the notes to these numbers. Like, what does that number one mean right there?
Hmm.
2022 includes outflows of 20.8 billion from certain mutual fund clearing service clients. So that's interesting, right? That number would have been 20.8 billion higher if that hadn't happened. And that's a one-time kind of major event. 2021 includes outflows of 42 billion from the same deal. So that actually declined, right? So we lost 42 billion from that source in 2021. We only lost 20.8 billion from that source in 2022. So it's actually improving year over year. Again, you got to read the notes. Don't just fall victim to looking at the numbers and thinking that you understand, like, oh, this is growing or this is falling or whatever. There may be one very extraordinary thing in there that's causing the number, like impacting the number in a way that you can't possibly know without reading the notes to the financial statements. So don't just come in and look at the numbers. You got to read the notes and you got to know what the number is actually telling you.
Yep. So
And so there's what, 2 pages of discussion on this
well,
that you went to?
yeah, and I want to clarify here. So that is what we were just looking at. That is the customer acquisition or the customer growth. It looks like, or actually, I'm sorry, erase that. So Shane, yeah, you've got that right. So when you look at that, tells you the year over year changes, and then down here, these are the explanations. So you can come down here, get a good idea of kind of like what changes occurred. And if you really want to get into these, that's where you kind of have to turn to those earnings call transcripts.
Mhm.
Um, they'll talk about some of these and add a little more context.
Yeah,
So,
and pause real quick. Oh,
yep.
where'd it go?
And I was just,
Sorry, your scroll is not very smooth here. I can't really see what's going on, but
yep.
there you go. every time I circle something, you're moving again. Sorry. This is not this is our first time going through something like this. So sorry for the confusion, guys, but I see things like this and they just jump right off the screen at me because one of the big issues was the held to maturity securities at Silicon Valley Bank versus the available for sale. So AFS is available for sale, HTM is held till maturity. Sometimes in our business we like to call them hidden till maturity because you don't have to report the actual value until it matures later, and it's basically hidden from investors as to what the value of those are. So when you see,
Yep.
like, you could do if you do Control F on your computer right now, Kyle, and you just type HTM, you're going to find all the occurrences of HTM in the document, and you can just jump to them, from one to the next and read everything about held to maturity securities. And then you could do it on AFS and look at all the available for sale securities and kind of get a sense of all the different commentary throughout this 100+ page document, which, by the way, it says
Yep.
168 pages up here, so I don't know what the table of contents is talking about. But
Yeah.
anyway, long story short, those are the kinds of things that I tend to look for when I'm trying to get through one of these.
Yep. And one reason, and I'll talk as I scroll, but why you might want something in held to maturity versus available for sale is one, simply with good intent. You just want to hold to maturity, and that's all well and fine. The other thing is, if you reclassify it over into that bucket, it does not hit your earnings. So if you want to have, stable earnings and maybe make them positive, and you have some available for sale securities that keep going down in value, moving those to the held to maturity bucket, that allows you to, discontinue having it flow through your income statement.
Very well.
And then let's see here. I've got page 38 I highlighted is kind of get into some of the big questions people have. So here we are. This is the net revenue we're talking about. So here it is. So interest revenue was it 12 billion? That is the largest income item on their income statement. So that's one definitely to make sure that we kind of understand what's going on there. So out of a total revenue of just about 21 billion, so that's 12 billion of that. So just a little bit over half. So that's a big number.
It's 59%, it says. So
Yep.
yeah, almost 60%. Here, backing up real quick though, just again, because some people, really might not have spent any time with this before. Like, interest revenue, which you see on this line, is how much the company earned by loaning money to someone else. In many cases, the someone else that they're loaning money to is the United States government. We loan money to the government when we buy United States Treasury securities. We loan money to home buyers when we, write a mortgage for them. Um, as far as I know, Schwab's business is not mostly mortgages. I don't know. I think there's a pretty healthy chunk of mortgage-backed securities in there. Um, but I think there's also a lot of government, issued securities in there. And so the amount of money that they earned by lending money to other parties was $12.2 billion, which was up 44% from the prior year's 8.5 billion, right? And so it became an even larger percent of total net revenues. It grew to 59% from 46%. Back in 2020, it was 56%. So it grew kind of back towards where it was back in 2020. So that's kind of what we're seeing here. So interest revenue is money that was generated by Charles Schwab by loaning money to someone else and earning an interest rate for it. Is that
Yep.
is that fair, Kyle? Anything else to add on that?
That is very fair. So they are, in essence, taking out the middleman. They're taking some of the cash they have available, your client funds, and just loaning those in nice, safe places for a little bit higher rate and making money on the spread.
Yep. And this is why, by the way, we tell people all the time, when it comes to financial planning, it's like people stay where you were, Kyle. Go back to where you were. I don't know. You love scrolling while I'm talking here. But but yeah, I think just hang tight for a minute. We tell people all the time that you can create the little bank. Oh man, my light's going crazy now. It's like a party in here. You see this on my screen? I gotta unplug this thing. Um, oh, there went my camera. That's not what I wanted to do.
Well,
Holy
we
smokes.
still got your voice.
That was wild. My light's still going bonkers. I gotta fix this because it's gonna give me a seizure. I don't know. I hope I don't pull out the wrong one here. There we go. All right, I think we're good. Sorry about that, everybody. But people often ask us, "Hey, should I pay off X? Should I pay off my car? Should I pay off my mortgage on my house?" And we always tell them, "Well, depends on what the interest rate is on your loan versus the interest rate or the rate of return that you can earn by investing the money, right? And you create the little bank of flurry, right?
Hmm.
So I don't make any extra payments on my mortgage. It's 2.99%. So I'm only paying 2.99% to not have to pay off the entire, say $500,000 balance of my mortgage. So it's costing me 2.99% to have that $500,000 not be paid off. And because I'm not busy paying off that $500,000, I'm taking the money and I'm investing it in things that, as long as they're earning more than 2.99%, I'm making the spread. That's how a bank works, right? They they borrow money at a low rate and then they generate a high rate and they keep the difference. That's all they do. That's all any bank does. And that's pretty much all any broker dealer does. Yes, they used to charge money for commissions, but they don't even do that anymore. So the vast majority of their earnings comes from this source right here. Um, were you not going to go through what interest expense is?
So that one I've got it in some other schedules, but yeah, the interest expense there. So as I mentioned, that's what they're paying the customer. So if they've got some funds sitting there, there is some expense associated with that, depending on if those are, money market versus just sitting in, say, a checking account.
Yeah. So, and the net amount is what they earn. Like that's
Yep.
what they get to keep. So they're earning 12.2, they're paying out 1.5, and they're keeping the difference. And that just gets added to the revenue. It's available to pay for operating expenses and salaries and new buildings and computers and 800 numbers and all that kind of stuff.
Yep.
So that is by far and away the largest source. It's more than double their next largest source, which is asset management and administration fees.
Yep. And then down here, so net interest revenue, you can kind of read through that, learn a little more about, uh, what's going on up there. So,
So we should probably get towards wrapping this call up. I knew this wasn't,
yep.
I knew we weren't going to get to the bottom of anything, but I don't know. I want to make sure you get a chance to wrap up anything you wanted to make sure we get to. So I'll shut my mouth for now. And we're going to come back to this later. Um, but yeah, I think we're probably getting towards an hour here, so we should probably wrap it up for today.
Perfect. So I think why don't we end it with this schedule here? So this one is a good idea. Well, what does their revenue business model look like, and how is their liquidity all in one snapshot? So this is in essence a balance sheet, except it's average balances. And look at this, Shane, you and I talked about this, the average yield. So interest earning 1.4. That's nothing, right? And then
Right.
you go down here, bank deposits, which is their largest funding source, they're paying 0.17%.
Mm,
I like that business model,
yeah.
especially in large scale.
So
So
if
they've,
you're a Charles Schwab customer and you have idle cash just sitting in your account, you're probably earning, less than 20 basis points on
yep.
that cash sitting there. So yeah, not very much.
So then, I'm looking at that. That's a big number, 424, or was it 424 billion?
Yep.
So that's the number. Silicon Valley Bank was undone because this number went down very quickly. So we'll talk about this in the later calls, kind of getting into this number and more of that liquidity risk and answering that question. Is Schwab well capitalized and how do they respond in a bank runoff situation? But anyways, all that to say is, if you go down through each line item, so then cash and investment segregated, which um, kind of same thing there, just segregated accounts. So those are split up by each individual customer. Receivables from brokerage clients. This one available for sale securities. So we're going to get into that one. That's the big one is, that's a very big number. It was switched over to held to maturity or a large balance. But if you look, that is one of their highest yielding investments. So they do pretty good there. But yeah, you can go through this. You've got your balances to see how large that segment is and the average yield they're getting and the average yield they are paying. So up here is the income, down here is the expense. Gives you a good idea just to understand kind of their business model and where some of that risk lies. If this 424 shot up to, 2%, well, now they're paying more than they're receiving. So, good place to look. But Shane, I
So
think,
to be clear though too, like and I'm just deducing this. I don't have I'm sure there's a note in here that describes it somewhere, but I'm just deducing that this number, this 424 billion in what they call bank deposits is not only traditional bank, because like Charles Schwab does have a traditional bank that has a checking account. You can write checks, you can get a debit card, you can buy a CD from their bank, but that's a very small part of their operation. So I think what they do is they have it set up that idle cash in a brokerage account gets swept over to their bank, even though the client who may own that brokerage account, and maybe it's a client of Elevate Capital who has a brokerage account and has cash sitting in there, and they're waiting for the market to bottom so that they can buy a whole bunch of Tesla stock or whatever it is. And right now it's just sitting there. Well, behind the scenes, Schwab sweeps that balance from their brokerage account over to its bank, so that it can, earn its spread and that type of thing. But I don't believe that like, as far as I know, Schwab's bank is very, very small compared to Schwab's brokerage business, the amount of money that's actually in brokerage accounts. And so it's a little interesting to me to see these two line items. And this is another reason where it's like, don't look at all the numbers without being willing to go and hunt through the notes to figure out what the heck it is you're actually looking at. Because, just by looking at this, you would think that Schwab is running a bank. Like that's their primary business, is to be a banker like JP Morgan or US Bank or Citibank or whatever, Bank of America. But that is absolutely not the case. Like Schwab's main business is running a brokerage outfit. And so I would, and I will, I would want to know more about, what that means. And I think I'm correct, just because I've got experience firsthand working with these guys. We have what, 120 million there, like I said, and I think we have maybe 500 accounts, call it. So far, I think we have 3 people that have opened a bank account there out of our 500 clients. And I bet you there's 20 grand in there versus 120 million. So their banking operation is just like, nobody thinks of Schwab as a bank. Nobody's like, hey,
mhm.
I'm going to open a checking account at Schwab. The only reason you'd own a checking account at Schwab is if you also had a brokerage or investment relationship with them. So just to make that clear, I think, if you're looking at this and saying, wow, they have a big bank, like, no, there's something going on with that number to make it that big. And it's a function of the brokerage business.
Yeah. And just to kind of wrap that up and hit on a key point we can dive into on the next one is, you'll recall, one of the first numbers we saw was they have 7 trillion in customer assets. None of these numbers that we've seen so far are 7 trillion.
Right.
So how does that get accounted? That's the question in this, is that there's that bank component, but then also on the brokerage side, where's that 7 trillion? So we'll
It's in
we'll
it's
get
in
into that.
stocks and ETFs and mutual funds and all that stuff, right?
Yep. So, but Shane, I think with that, do we want to just hit the Babylon Bee article and then we'll do a to be
Yeah.
continued on this?
We'll definitely hit the B. I think for now, while you're pulling that up, my conclusion is that, um, I'm comfortable with Schwab as a business, compared to something like a Silicon Valley Bank.
Oh,
And I think it makes a lot of sense, to look at it as a potential investment, because I think the baby's getting thrown out with the bathwater, as they say. I think the financials are getting hit, and Schwab is getting sold, even though its business doesn't look anything like a small regional bank at
hmm.
all. It's nothing like it. And in fact, we didn't get to it today, but Schwab is the beneficiary. I mean, they took in 15 billion of assets, I think, the week that Silicon Valley Bank failed. And all the money that came out of those banks is going into places like Schwab. So they're actually benefiting from it. Not only is it not a problem, but it's like a benefit to them. So for that reason, it has my attention.
Yep. So,
Um,
and we'll get into that more, but just to wrap up this week here, we've got a good follow-up. So Babylon B gave us some very insightful information on where else you can put money that might be safer.
I'm very familiar with number two. My
Hmm.
wife loves Target. I
Oh,
actually bought something on Target.com for the first time the other day, which is a portfolio holding of ours. So I like Target.
yep. Target's great. My wife, she saves 30% there, so those are great rates when they have them. Um,
If you save 30%, how much did you spend? That's the question. I think that was the funniest one that I saw on there is giving it to the wife for Target. Oh, you got the degenerate gambler uncle. Maybe you can go get some lotto tickets.
yep,
Get a good rate of return on those. And of course, the classics, stuffing it in your mattress,
yep,
would be much better than having it at Silicon Valley.
yep. So,
So anyway, the most expensive thing in the world is free money, guys. Don't ever forget it. When the government starts printing free money to bail people out or send checks to your mailbox or do anything like that, it's the most expensive money that ever there was, and we will find it in the way of inflation, as we have all experienced over the past year. So don't be fooled. That is very expensive indeed, and they can call it a not a bailout as much as they want, but the taxpayers will bear the brunt of the cost in the long run. They always do.
yep.
Always.
So, well, Shane, thanks again for your time and looking forward to next week. So we'll dive in a little deeper and get more into the actual financial statements, how to look
Yeah,
at those and kind of form a conclusion, I think, off that of, how confident are we in the stability and safety of Schwab? And I think generally speaking, I'm feeling pretty good, but let's dive into those numbers further and see what we come up with.
sounds good. Sorry to our viewers, nap time is over. You can wake up and go back to your day now.
Yep. So awesome. Well, Shane, you enjoy your weekend and we'll see you next week.
All right, see you, Kyle.
Yep.